Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Hey Damas,
Hey Janar, how you doing?
I'm doing okay. And you?
Yeah, not too bad, thank you.
Welcome.
Hi everyone. Hi Tomáš.
Hello.
Hello, Thomas.
Hello.
Hello. Hey, doubled up.
Yeah.
Nice. I was reading something about Nvidia and their earnings report in May. Obviously, they're predicted to just blow the numbers out of the water again. Good afternoon, Tomáš.
Hello, Kai.
Hello, Thomas.
Hello.
Okay.
I'd like to invite you to my free trading webinar, which will teach you the basics.
Oh, not that guy.
That guy's so annoying.
He's,
Did you hear
he's-
it?
Yeah, he's a prick.
He's a twat.
Everything you've ever learned is a lie.
Right, I'm gonna cut the 2 positions because it looks like we're going to have a retest on the daily pivot. So my entry was a little bit early.
Hmm.
Because my calculation was wrong. Pivot is a bit lower at 88,900. Yeah, I'm gonna cut it. So it's £900 loss. I'm gonna wait a little bit.
Mas, just a quick question. Do you know, because of the position that we're in with the news and the economy of the US, etc., do you know if the US bring out data which is good for the dollar, either way, gold will still go up regardless of the data, right? Because they're getting closer and closer to current interest rates, right?
Yeah.
Yeah. So the news, yeah.
$92. So the pivot is at 89 and it's 92, so 30 pips away. But that would be a very bearish 4-hour candle. And if you look at the chart,
There's kind of a little channel, isn't there?
break and retest. Yeah, I'm gonna wait a little bit more.
Hmm.
Ugly.
Made your money back from yesterday. It's good.
think I'm gonna go in now. Placing the SR to 87. Around 88. Yeah.
When I started my poker journey, I learned the hard way that
What's your educated guess on JObless claims today, Tomasz? I think it'll come out higher.
Funny that, or interesting that continuing jobless claims, still there's no forecast for weeks now. Which
Every week it gets revised, isn't it? So
I don't know why they stopped giving out the expected data. No clue. Maybe on trading economics there's some. My guess, I don't know. I don't know today.
Charles, what are you looking at today?
I had this morning off because yesterday sucked towards the end of the day.
Yeah, fair enough.
And then there's hardly any news or anything coming out, is there? Slow day.
Hmm.
The figures are different on investing.com compared to trading economics.
What'd you say? What'd you say?
So continuing jobless claims on trading economics. Oh, they do have a forecast actually. They say it's 1,822.
On trading economics?
Yeah.
I don't see no forecast.
So it says the previous was 1,819, and then there's no consensus, but there's a forecast of 1,822.
Oh shit, yeah. Oh yeah. I'm just blind.
Weird. Some people think the pound will still fall further against the euro.
No, I think it will rise for today if jobless claims does come out higher, as expected.
Yeah, maybe today. Reuters overall estimate.
Oh yeah. Overall, definitely, yeah. It'll be tomorrow, I think, if the NFP comes out at the previous month.
Yeah.
Do you know what I mean?
Do you ever use pound sterling live.com?
No? What's that?
It's a website that's obviously news, but just mainly about the pound.
Have a look. I'm styling
No.
live.
Yeah, I know it's a little bit slow though. It's not doesn't give,
Summary news, isn't it?
yeah.
Yeah. The more articles, the better. Do you know what I mean?
Mm.
GU giving a entry for buyers for news when it comes out, I think. It's falling heavy right now.
Oh yeah, pivot, daily pivot and weekly pivot are together.
Yeah, I mean, I don't even mind it going to the weekly open, to be honest. About 6,350.
GU is huge, you know. You can earn so much money.
You said what?
GU's mad, isn't it? You can earn so much money on it.
Yeah, on a good day.
Yeah. GJ still got room to rise as well. So both of these pullbacks could be quite nice.
Yeah. I won't be entering anything till news, but yeah, does look good.
And that 1 hour candle is looking real bearish.
The new one, yeah.
I think it's going to drop 10 more pips to the pivot and just pull back. Or
That would be amazing.
yeah, something like this.
Yeah, I was gonna say there's a bigger trend line on the 1 hour. It's like a bullish channel. And this is close to the bottom.
As long as that 4 hour close is like slightly bullish, I think it should be fine to have a buy that goes to solid 2310, maybe a bit higher.
I think we'll definitely see a tag into that pivot.
Pretty high chance, yeah. way I look at it, the next 4-hour candle closes in 1 hour. We got news in 30 minutes. Seems like something is being said right there. Daily pivot going to be hit, then straight up because market sentiment. Screw data anyways, right?
Yeah, I mean, even if it is good data for the dollar, it just means that they're likely to cut interest rates sooner. So I think any data will just take prices of gold up, in my opinion.
I think at this point, like you said, it's either going to be we are going up on the hope of cutting interest rates, and on the other side, it's data.
Yeah, a lot more than just cutting interest rates as well.
Szia! Jó, rendben. Szia. Szia, Roland. Nem tudom. Jó. De ja, és akkor most várjál, akkor kész van a gép, vagy akkor visszatérítés? Jó, rendben, oké. Jó. Jó. Ne, nyugodtan hozd el, az jó, szuper. Oké, köszönöm, szervusz.
Hamas. This morning I was watching Bloomberg, and they mentioned that a possibility of people buying gold because of the expectation of inflation might be sticky. Now, what does that mean?
Means that prices are going to stay higher for longer. So it's not just rates. You know, prices are sticky because once they go up, they less likely to come down. So for example, when you take a job and you negotiate a salary, most likely your salary is going to stay the same for a period of time because it's sticky. Prices are the same.
Okay, so just because interest rates might get cut, doesn't mean prices will come down as well then, right? Is that what they're saying?
No. It's no, usually, well, statistically, if you look at the comparing year-on-year figures, then sometimes if prices stay the same, they don't decrease, but statistically they decrease because they're not increasing, but they stay high,
Right.
so it's sticky. It's like you spit up on the ceiling and it doesn't come down.
Okay, yeah, no, that makes sense. Thank you.
Get real projects.
Multiples. So we do pivot on occasion. You know, I think we're feeling, despite what I said about soft landing, you know, in general, we tend to be a little defensive. We tend to like less cyclical, recurring revenue names. We like some of the rate-sensitive names today, some like utilities, even staples, which had a tough day yesterday. So we think about all those things as we come up with our private market value, but ultimately we're looking for stocks that are cheap.
It's interesting to me that you're picking stocks that are more rate sensitive at a time when that's one of the big disagreements. We've been talking this morning about at what point do bond yields really pose a problem to stocks. Do you think that there is a resiliency baked in just simply because of the growth picture that's allowed yields to climb?
Well, yeah, obviously a lot of those stocks got killed over the last year, and don't think rates are going up. So, there's a chance for a resumption of earnings growth and continued multiple expansion, again, which we saw in the first quarter with some of those names.
Can we do some single names then? Can you tell us in tech what you'd leave behind, what you'd drop? What have you sold?
Yeah, I mean, listen, we were a little late onto Meta, still like that one.
Sticking with it.
As well as Google. I'm a little bit worried about Google. I see some parallels between what we saw in media and Google. Google's no doubt a leader in AI, but is the search business of the future as good as the search business of the last 10 or 20 years? In other words, can they replicate the monopoly that they had in search in a world of AI? And I'm not sure that they can do that to the extent that they once did.
When you say there are similar problems in media, is that what you mean by that? The challenge that AI presents or something?
Basically, it's the whole analog dollars for digital dimes type trade-off. And obviously, AI is more expensive, unclear how they monetize it, although there are increasing signs that they can monetize it either through subscription, as we saw yesterday, working with distributors like Apple, et cetera. But is that world going to be as good as it once was for for Google? Now, Google, of course, does not trade at a particularly steep valuation. It actually trades at a discount to the market. So much of that has already been priced in, was priced in last year.
But you're staying with that name for now?
We're staying with that name for now.
Okay, I want to introduce Disney into the conversation as well. You mentioned media. Big win for Bob Iger just yesterday. What is he doing right? What is he doing wrong?
Yeah, Trump-Biden, this was not. I think this was a foregone conclusion. There's no doubt that Iger's got the magic touch, and he's done a great job with Disney. But Disney does have its issues, including finding a successor to Bob Iger, which was certainly highlighted in the Trian proposal. Still something that they need to deal with. Listen, Disney has an unrivaled stable of brands, and they've got the parks business, which is doing great, and continue to do great. I don't know what they do with ESPN. That's a big question mark. And the stock has obviously had a huge run, a sneaky huge run in the backdrop of this Trian fight, and it's not cheap here.
Well, let's talk about some of Trian's proposals and what might still get effectuated, because it did garner as much support as it did among investors. The idea of running more like Netflix, the idea of distributing more of the potential cash flow to shareholders, and spinning off ESPN or doing something. What of those do you think is most likely to go through?
Well, again, I think all of those are under consideration, obviously, at all times. Among the other things that I think has been focused on is continue to focus on the parks and reinvest in the parks, which is a very good business, which Comcast, which owns, of course, the Universal Parks, has done to a very great extent. I think that's going to happen. As far as I think there has been a reinvigoration of the content investment, looking for more originals. That, of course, was impacted by the pandemic as well as the strike. Put a little bit of an air pocket in that. But so we'll see what happens over the next few years with the slate. You're not going to see that overnight, for
Chris,
sure.
can we talk about the importance of leadership? I struggle with this. There's 8 billion people on the planet, and we're sort of led to believe in media circles and on Wall Street as well that there is only this one person that can run this company, and his name is Bob Iger, and that's why there's this massive struggle for succession. How important is one person, one man? Are we serious that out of 8 billion people on the planet, we can only find one guy to run the Walt Disney Company? Are we meant to believe that? Yeah,
some people would have you believe that. I don't necessarily believe that. I do think that leadership and those leadership qualities are scarce, but there's not one person. We tend to like businesses like Buffett that can be run by any idiot. A ham sandwich, which again, Bob is clearly not. But listen, he has a charisma, he has a certain drive, he has a certain likability within the company to get everybody moving in the same direction and to, again, restore the creative magic that has been lacking over the last few years.
Are you still a shareholder? Are you still a shareholder of Disney?
Small. We haven't been in the stock in a long time.
The reason I ask these questions, I think it is an important conversation to have. I think that when you have CEOs of public companies that have been there a long time, they start to behave like founders. They're not founders. They're meant to be custodians of public companies. And if they haven't come up with a succession plan, why aren't we having more serious debates about the failure of coming up with a succession plan? If we're all led to believe there is only one guy that can run the Walt Disney Company, shouldn't the conclusion actually be that he has failed? to find one person out of 8 billion who can run this company. And isn't that part of his job as the CEO, as the custodian of a public company? He's not a founder. I see this in industry after industry, that we treat people who lead companies for a long time as if they are the founder of that company. They're not.
I think you're right, and I think that criticism by a number of the activists, not just Trajan, was spot on. That is the major failure of this board, and frankly of Bob Iger, is to find somebody to replace him.
I mean, I think it's an important point, and I think that this kind of goes to the moment that we're in also, because it's in politics and it's in business, and it sort of points to this issue that anyone new is going to be controversial because they have to put a new spin on a company that's established itself in a far less controversial moment.
So Nelson Peltz's point, I think, is a valid one, and I wonder which other companies out there need the same treatment. Can you think of some right now?
Well, we certainly have plenty of founder-led companies in media and technology, obviously, and you know, coming to
well, founders. Excluding founders from this conversation, they gave birth to these companies. I'm talking about people who are in these seats that are acting like founders when they're not.
Yeah.
That's the issue that I've got.
I won't name names, but I will say that, Lisa said, what changes can we expect? I think you're going to see a lot more activity on the succession front at Disney soon. At least, you know, we've got a stable of individuals who are being talked about. I don't know what kind of process they're going to run, but you're going to hear a lot more about those individuals over the next year.
Fascinating. Forgive the rant. I'm not that passionate about it. Chris, thank you. Chris Morangi of Gabelli Funds on the latest in media and elsewhere. Let's give an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Boeing's crisis has left major airlines desperate for planes, sending the cost of used jet rentals to the highest level in years. As Boeing slows production following January's Alaska Airlines door blowout, competitor Airbus is struggling to lift output, leaving airlines searching for the largest single-aisle jets they can find. Monthly rents for those jets now topping out around $335,000. Lessors are gaining leverage and likely to shift planes to airlines willing to pay a premium. Disney shareholders shot down activist investor Nelson Peltz's effort to win seats on the company's board. Investors voted to re-elect all 12 of the company-backed board members, including CEO Bob Iger, ending the most expensive corporate proxy fight in history. Peltz Triumph Fund Management holds a more than $3.5 billion stake in Disney. It has been trying to get seats on the board to address lagging shareholder returns and what it sees as inadequate corporate governance. Tesla CEO Elon Musk says he's boosting pay for AI engineers as the company deals with a talent war. Musk posting on X that OpenAI has been, quote, aggressively recruiting Tesla engineers with massive compensation offers and have unfortunately been successful in a few cases. Musk going on to say the talent war for AI engineers is the, quote, craziest he's ever seen. The tech billionaire is pursuing AI projects through Tesla and his XAI startup. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, it's the markets versus the Fed.
Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decisions on policy.
That conversation up next, live from New York. Good morning.
My name is Nikolai Coster-Waldau, and I believe this moment in time will be when we started to transform the way we live to inform the future we want.
Let's go to a cooler place.
This show is about solutions and the people behind them.
The worm that can actually dissolve plastic.
This would be a carbon-neutral jet fuel.
This is an optimist's guide to the planet.
Jamie Lannister on the Roomba.
And how other cultures, other people live. And it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
Right. 8:30. Last four digits of your.
It's Jobs Day, and Bloomberg has the report under surveillance.
Jobs numbers have exceeded expectations consistently.
The U.S. is just exceptional. Look around the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
When you see numbers like this, is that no longer a reason to be hawkish at the Federal Reserve?
It's a reason to be cautious, maybe not hawkish.
The March Jobs Report, Friday, only on Bloomberg.
Live from New York City, equities positive a third of 1% on the S&P. Under surveillance this morning, it's the markets versus the Fed.
Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decisions on policy. If the economy evolves broadly as we expect, most FOMC participants see it as likely to be appropriate to begin lowering the policy rate at some point this year.
Here's the latest this morning. Fed Chair Jay Powell saying that recent inflation data hasn't materially changed the overall picture when it comes to rate cuts this year. Former New York Fed President Bill Dudley saying he thinks the Fed is wrong about how low rates will go, writing this: betting against the Fed is a fool's endeavor. Nevertheless, in this case, I think the market is right. While the Fed's projections for 2024 look likely to be more accurate than the markets at the start of the year, this time around it's the central bank, not the market, that will probably have to adjust. Bill, I'm pleased to say, is with us now for more. Bill, this came up in our last conversation together, the spread between the market and the Federal Reserve. What do you think explains that? Is that just a refusal, a reluctance of this Fed to really engage in that debate before we...
Hey, Dorothy, you know, yesterday you said, place that buy, it's going to go...
Yeah.
We
got it, didn't we?
I didn't enter, but you called it.
Yeah, I wanted, I was just trying to get to 86, 2286, I think, at the time, yeah.
It did reach 50 pips. So I mean,
yes.
The
market thinks that
yeah, that's all we wanted, isn't it?
around
Yeah.
3 3/4%.
That's nice.
The Fed, in their summary of economic projections, has it going down to 2.6%. So there's over 100 basis point difference. I think the market's right that the Fed's not going to go as far as the Fed is projecting in their summary of economic projections for two reasons. One, inflation is probably not going to average 2%. It's probably going to average a bit higher than 2%. And number two, R-star, the so-called neutral rate, that sets a neutral monetary policy, probably has risen, given the large fiscal deficits, the AI investment spending boom, and a host of other factors that are basically putting more pressure on the pool of savings.
Bill, I often reflect on a conversation you and I had together a number of years ago. I'll sing your praises because you're a modest man and won't do it for yourself. You said in June of, I think, 21 that rates are going to go much higher than people think. And I remember when you talked about 5, and 5 sounded so foreign. 5 at that time now would be like me saying that 10-year yields are going to 8%. People just turned around and were like, Bill, you're nuts. We're not going to 5%. What did you see that early that led you to believe that rates would need to be that high to get inflation down? And how does that inform your view of where things will be longer term?
Well, the Federal Reserve set themselves up deliberately to be late in terms of tightening this last cycle. They basically said we can't raise rates until inflation is 2%. We're at full employment, and we expect inflation to be 2% above 2% in the future. So, by definition, they were going to be very late. If you're late, that means you have to do more. So that's the reason why I thought that the rates would have to go quite a bit higher than they expected. This time, I think my disagreement with the Fed is the fact that they still think neutral federal funds rates very, very low, 2.6%. Their median estimate of the long-run neutral federal funds rate at 2% inflation. And I think that's probably not the case. I mean, it's true after the great financial crisis when we had a lot of financial damage to the economy. But if you look back at the Taylor Rule prior to the great financial crisis, Taylor Rule had 2% real rates as neutral. So the 0.6% reading that the Fed has as their median estimate seems awfully low to me.
Given that, how much do you think that there needs to be a full repricing of just how much of a cutting cycle there needs to be in the very near term? In other words, if 3 rate cuts this year seems a little bit lofty, given how strong the data has been, and you see a more likely chance of 2 or 1?
Well, I think this year is really going to depend, as Powell says repeatedly, on the data. Small differences in the growth rate and the inflation outlook are going to change whether the Fed does a little or more. I don't think 3 rate cuts are out of the realm of possibility. I think where I disagree is more longer term. And you've seen what's happened. The market's repriced that longer term upwards. 3.75% is the bottom for the federal funds rate, and that's what's pushing up 10-year bond yields. So the bond market is adjusting to the fact that they're changing their expectations of where the Fed's going over the longer term.
The reason why I ask this is because every time we hear from Powell, he talks about bumps in the road. And he talks about how recent data, even though it's come in hotter than expected for the most part, doesn't alter his view that it would be appropriate to start cutting rates at some point in the near future. At what point should that shift? Should some of these data points be viewed as something other than bumps?
Well, his view is that monetary policy is tight, and so it's just a question of time before it slows the economy. The other thing he thinks pretty strongly, and he's talked about this yesterday again, is that the reason why growth is strong is because of supply chains normalizing. So your supply constraints are holding back the economy, supply chains normalizing, you get a one-time increase in the growth rate. I think that what he's underestimating is the fact that financial conditions have eased a lot since late October, and that's also supplying considerable support to the economy.
And it also raises this question, I know you addressed this last time you were on, about whether policy is truly restrictive or not. And you didn't think it was nearly as restrictive as many people had expected. Do you think that there are more people on the Fed who are coming around to this view, who are thinking, wait a second, if we're seeing such easing in financial conditions at rates where they are, maybe that suggests we're not nearly as restrictive as we keep saying?
I think very slowly we're starting to see that happen. The median estimate from the Fed officials about where neutral federal funds rate is at 2% inflation moved from 2.5 to 2.6%. So it moved to 0.1%. So it's starting to move. The other thing that's important here to note is there's a big skew to Federal Reserve officials' estimates. The bottom is at 2.4, the top is at 3.8. So there's plenty of room for the median to move considerably higher than the 2.6% that they have today. So I think it's going to continue to drift up.
Bill, love this piece. Fantastic. Just out this morning, Bill Dudley of Bloomberg Opinion. Bill, thank you. The title of this, please, the headline. The Fed is wrong about how low rates will go. Betting against the Fed is a fraught endeavor. But Bill says, in this case, I think the market is right.
Basically looking at a terminal rate of 3.75% as being where the destination is. If you take it a step further, how does that transpire in markets that have already come around to that? Have risk assets truly priced that in? Is that something that's priceable when we don't understand the financial conditions around it in terms of what the economy looks like? This is one of the reasons why my head is spinning. Do we understand just what the consequences will be on risk assets? When I remember when the rate hiking cycle began, people were saying expect really low returns for the foreseeable future because we're going to bring back all of those years of great returns from easy money policies. This is the part of this that just isn't adding up.
I mean, never mind the last few years, just look at the last 5 months, the last 2 months of 2023, and we had rates grinding lower. In many ways, Treasury's absolutely ripping, yields down, expecting rate cuts. Equities did great. You start 2024 and you're thinking we need more of the same. You need to start pricing in rate cuts. Fed needs to lean into a cut in March. Did completely the opposite. Equities just took off. 10% gains in Q1. And it's that relationship, your head spinning, mine too, trying to interpret this relationship between what is happening in fixed income and commodities now and working out what it means for stocks.
Andrew Hollenhar is talking about the potential for double the number of rate cuts on weakness to the S&C. Going back to what you just said about late last year, those rate cuts were considered a positive for stocks. Now, my hunch is those rate cuts would be not viewed as positively if they came on the heels of such weakness, which just highlights how turned around some of the narratives have been over the past 6 months.
On its head in just 5-6 months. Up next on the program, more economic data. Mike McKee's going to break down jobless claims for you. They drop in about 5 minutes' time, and we're going to catch up with Becky Frankiewicz of Manpower, here to react to what's happening in the labour market. Jobs day just around the corner, payrolls 24 hours, 4 minutes and 13 seconds away. Something like 200k is the estimate from New York. This is Bloomberg.
Did they say their estimate was 200k?
200k, yeah. For initial, significantly lower.
Just looking at your portfolio of businesses, It is about resilience. It's about pressure. It's about women. Like
2 minutes and
how does
30
that come
seconds.
together how does it manifest in the deals that you're doing now?
Yeah, it's one of the things that I became increasingly passionate about after I retired, was acknowledging the fact that focus and this performance
News events are going to start getting a bit weird, aren't they?
asset that I had gained and that I had worked on and perfected for over 20 years, and now working through brands and founders. I just recently announced a collaboration with the Amman Hotel Group, where I bring in the best talents in sports recovery and performance mindset in retreats and offering it there to their clientele. Our first one is actually in Phuket in February. So working through what that means, I mean, if you see the stats of Fortune 500 female CEOs, 80% of those women have played sport competitively through their life journey. And all those skill sets that they've built, to me, they were part of this.
Twenty seconds. Three, two, one. Oh, it's lower.
Way high.
It's higher, no?
Continue lower.
Ah, continue. Okay.
Would you say it's mixed, Tamash?
Yeah.
Yeah.
It's mixed, so it's up to the market sentiment, which narrative that I'm going to take in. Is it, well, personally I focus on the continuing, but I think these days it's, sometimes it doesn't matter what I say or what the economists say, because the market sentiment is clearly way much stronger.
Initial jobless gain is quite significant jump.
Yeah,
isn't it? It was revised up.
91 is the continuing claims number. One other number, trade deficit comes in higher than anticipated, 68.9 billion. That is compared with 67.6 billion on a revised basis the month before in January. This is a February number. It will weigh on February growth some. Remember, we were at 2.8%. In the Atlanta Fed GDP now, last reading.
Mike, help me with this. How much weight should I put on jobless claims rising more than expected, but continuing claims falling more than expected? I put more weight on one versus the other?
Not at this point. I mean, I think I would look to the continuing claims for a view of how the economy is doing. If they were rising, it would suggest two things: more people getting laid off and more people having a harder time finding new jobs. So at this point, it's all kind of noise. The changes on a week-to-week basis that we've seen isn't telling you that the economy, the labor market, is significantly weakening.
Which is the reason why markets probably are not responding all that much, as the initial read is very little when I look across the screen. But I do wonder, Mike, when you talk to different economists, how slow-moving can things look before there can be sudden shifts, right? I mean, are we looking for some sort of sudden shift that Andrew Hollenhorst is reflecting in his note? Or is this just sort of the slow grind that we're going to see initial jobless claims potentially slowly rise over time?
Well, history tells you that we do see, when you go into a recession, you can go into it very quickly. The data can change very quickly. But we have so much data now, it's hard to think that we would see a real huge shock in the employment numbers. And we haven't had one for a very long time. I mean, you can have them when you have bad weather, something like that. But at this point, the surprise would be not that we see a terrible number, but that we see a number that's way off from what economists anticipate. Wall Street thinking we're going to see a strong number tomorrow. They're at 227 on the whisper number, where the forecast is 213.
So we always talk about this, and I think it's important, especially heading into tomorrow, which data matters most. And you pointed to, when we got the ADP report, that 10% figure in terms of wage gains that job switchers got. How important was that, given that people kind of question the relevancy of this particular set of data?
Well, people are going to, the Fed is going to be taking a look at it, and they'll be looking at average hourly earnings. They prefer the ECI for a more accurate look at where wages and salaries are going, but we have seen average hourly earnings still over 4%. Great for the consumer, but the Fed thinks 3.5 is the top end of where you are seeing sustainable levels. So they'll be watching that, but it's the headline number and the unemployment rate that are going to get the most attention on Wall Street and at the Fed, because Powell basically has laid that out in his last two speeches, that we won't feel a need.
Okay, guys, I'm gonna call it a day. Apologies, it's not my best day. Some personal issues. The data is out. You heard what the man said. Now it's up to the market to decide. But I think the market sentiment is going to help push gold back to 2,300 to retest the previous highs. Thank you so much, and have a good day.
Thank you, Thomas. Have a relaxing one.
Have a nice evening.
Bye.